Good afternoon. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, and we are now at the 16th of April, 2020, and the time getting on to 4:43 p.m. Central Time. Well, the stock market, a surprise move to the upside. I say a surprise because the big move of the day, the big dilemma of the day was the unemployment numbers. Now we got 22 million people unemployed, but the market keeps looking over this shoulder and saying to itself, yeah, but we're going to see people back, and the states are talking about rolling out phases to get out of things, and nothing's going to stay this way forever. They're right on that. Completely right. So, if the market wants to look over its shoulder, that's fine. The problem is each week's economic data is going to stink. You know it. I know it. Those putting out the data know it. And the market's absorbing it. So that's a good thing. Gold down today, silver market up. I would have thought it would have been the other way around, exactly the other way around, but it wasn't. Dollar index really weighed on everything, up very strong. Traders moving to that, and traders are moving to the bonds and the notes. There's note markets in the 0.60 area in the 10-year. So you can imagine what that's doing. Energy markets just sort of drifting right here. They push new lows. I don't think we've been in this low since 2002 or something. It's crazy how low that is. When we look at the S&P for the week, and it's been a struggle, but for the week it is up 7 points. The market still has downside bias as it's under the 18-week moving average of closes, but I'll give it a lot of credit. This market so far, back in March, had that blow off to the downside, and this has been a nice bounce. But so far on the weekly chart, it's a bounce, not a trend. When we come to the daily bar chart, this would be a 38% retracement, a 50 in a 62. I don't think you're going to fight with me saying the market seems to be stuck here at that 50% retracement. If the market gets up to the 62, I have a harder time arguing you're coming back to these lows again. If it starts falling from here, I have a much easier time with it. Why? Well, let's go through the charts. We have a pattern, and I've labeled off with these for you, these arrows, where you've got higher lows and higher highs. That's bullish. The second part of it, the market's over the 18-week average of closes. I define bias. If the market is over that number, upside bias, under it, downside bias, and it acts as a filter on the swing line. So, everything bullish right there. Where's the resistance? We see it. It's the upper Bollinger Band. And for the bulls, in all fairness, that band is still looping higher. It hasn't turned down lower to say the market's ready to let go. That's another good sign for the short term. Last on the bullish sign still, you have the embedded reading. If you lose the red line under 80, that would be a sign this market wants to slip back to the 18-day average. It has not done it. In fact, since you lost the embedded reading down here, and we can come all the way back to that, I think you'd agree with me that once that momentum was lost, the market made its run for the 18-day average, regrouped, and then started this other leg to the upside. Hit the upper Bollinger Band, hit it, ran it, and now it's moving to the right-hand side of it. But still, the bulls have control of this market until that red number closes under 80. The powerhouse market has been the FANG stocks, and they're dominating what the NASDAQ is doing, and it's running, and you can see Amazon running for the moon. I think it was up $100 today or something. These other stocks running with it, and it's all part of COVID-19, people being at home, a whole new way of life for us. It's not going to go away very easily. When do you think you're going back to a movie theater unless they reconfigure them? When you're going to restaurants and bars, everything's got to be redone in a different way. And even then, how are you going to feel with that mask on all the time? And I'm talking in the big cities. Obviously, in the smaller towns, it might be a little bit different. As we look at the Dow, you have an embedded reading here. So embedded reading here, embedded reading, embedded reading. You still are in the bull camp in these. As much as they're fighting, they're doing a pretty darn good job of it. And until they lose the embedded reading, that at that point you will hear me say one thing. I think we're going back to the 18-day average. Until that occurs, why not the upper Bollinger Bands? That can happen. The market that never did develop that locked-in trend off of momentum is the Russell. But it's not been doing that for a whole 6 months, year, and it's drifting down. It's saying the market wants to come down, but it's the minority market. And if it drips and drabs, the 18-day average is all I'm looking for on this break before it tries to find its footing. In the VIX, this has been a problem because if you think the stock market's too high, the VIX should be going higher. And the big boys aren't doing that. In fact, here's what I'll tell you. I think if you went down to 32.67, you'd find some put writers. Yep. Saying that you're not going to drop from there. You're probably going to find a bottom in this area and they're going to bounce towards that 18-day average. But you haven't done it yet. And you have the embedded reading. Lose the embedded reading, I think you're going back to that number. Hit the lower Bollinger Band, I think the put writers show up. In the T-bond market, this is what I call drifting price action. You're not trending. You have a higher high and a lower low. You're drifting around in momentum, just moving in waves. And you've taken the Bollinger Bands. You see how narrow they've gotten all of a sudden? That means volatility is coming out of this market in a massive way. Same thing going on in the 10-year note. It tried today to get to that upper Bollinger Band, missed it by 3 ticks. That's the resistance zone. You're overbought, not embedded. I still say the pros will move on that part of the market. In other words, they'll come out against that. In the dollar index, a nice rally off an oversold condition, but to negate the downtrend, you got to take out 151. To restart the downtrend, the market has to just have an inside day or drop back and get through today's low, either one. But if you take out 151, it's back to the drawing board to try to figure out what the market wants to do next. In the eurocurrency, at least it finally fit in with what the dollar's doing today. You drop through that low. You're out of an uptrend. Now you have a higher high, lower low. Market momentum pointing down, could be getting a bit oversold. Japanese yen still has a pattern of lower highs, lower lows. Momentum turning to the downside. 2 layers of support under it, 92.51, the 100-day average, and 92.36, what is that, 35, that is the 18-day average of closes. In Bitcoin, how many times do we have to hit this 18-day average for you to start getting the message? This market's finding its footing. Now, mid-May is when we start seeing that halving process. And at that point, there'll be less coins made forever. It just keeps getting less and less and less. If it's a Bitcoin, that's how the programs are written for the miners and the people that create the coins. And if you look at Brent versus WTI crude, it's back and forth day after day. We're going to hear the president shortly make a pitch, that's the right word, that he wants our government to buy oil for our strategic reserves, but I think he came up with something very clever. And instead of the oil producers bringing the oil out and physically putting it somewhere, he wants the government to take ownership of the oil in the market. So if I'm buying from you 1 million barrels, just make this up, I don't want you to produce that million. Leave it in the ground, I'll pay you. Now, I don't know all the workings, but the idea there is what? You have to say how many barrels you got, make sure that your well doesn't not produce them, that it can produce them, but he doesn't have to pay storage at that point because there's no storage around. You don't want to put it on ships. You're running out of storage at Cushing. This is a pretty clever idea. Whoever came up with it, I think it's pretty good. In Brent versus, well, first let's go to the Brent. No trend. Higher high, lower low. I want you to keep your eye on this sideways action of the black bands. It's like prices in a pipe. It's a spring, just moving back and forth. It's winding up. Same thing in WTI. No trend, just drifting now. Higher high, lower low. Gasoline. Will the market break through finally this 70, in fact, the number that would hurt the markets was 7,500. You took it out today. So you have an outside day down, and that could mean you're headed back to the 18-day average, but I'm not seeing anything here. I'm just seeing that sideways action. It's not giving you much of a trend. And in nat gas, this was impressive today. You came down, didn't take out these lows, and you had a big reversal to the upside on a day where we saw another 73 billion cubic feet go into storage. Bearish action, and yet from the fundamentals, the market was able to pop up. So we pay attention to that. Remember, one of the things that I'm now doing is putting out at the end of the day words on 27 charts I'm doing on spiders and ETFs. I know a lot of you like the futures, they tie together, you know that and I know that. So I've created 2 video services now that are paid subscribers. Morning for the futures, and then afternoon, right after the markets close, I'm recording the spiders. And the idea is to give you trading ideas for the next day. Now, you know as well as I do that the spiders are all going to take a look at what the futures do at night, early in the morning, to get an idea should they be opening higher or lower as a group. Certainly, the different sectors always perform a little differently, but I'm covering DIA, QQQ, everything you can imagine in the SPY. And these are the ones that I'm covering. So it gives you a pretty good idea as to what I'm trying to do there for you. And the video is probably 15, 20 minutes long. Again, it's got that pull down on the menu. So as you go through it, let's assume you just want to go to the currencies. You pull right there and it lights up and it's telling you you're in the currency section. Same in the energies. And we are giving away with it our mobile handheld device so you can keep up with the markets and so on. How do you get this? That's the next question. It's simple. You go to our website, www.iraepstein.com. Under it, you'll see the word research, right at the top, actually, of everything. Move your cursor, drop-down menu, and you're going to see the Spider ETF video. It's inexpensive as can be, and that's the whole game here. It's not trying to create something that a price is absolutely going to hurt you in any ways. As you can see, $8.95 to try it for 30 days. You're not committing to anything. I think you'll find it well worth the time and the effort on your part, and it's entertaining. And let's face it, how much Netflix can you do over and over? So take a look at it. You can always call my staff. They'll help you. I'm Ira. I'll see you tomorrow.